Live on YouTube, that's correct. Live on YouTube. Soon to be live on LinkedIn. There I go, live on LinkedIn. Perfect. Live on LinkedIn. Now let's go live on WhatsApp. Episode 180. Done. Ready. Beautiful. So let me just check myself on YouTube audio. Ready. YouTube is great. LinkedIn is great as well. And then we go. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, a daily mental workout, a daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Ah, my God. Beautiful. Let's do it again. Wonderful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin. I feel better today. My voice is better. Uh, you know, it's not good. It's not perfect, but it's not like yesterday. It's not a second copy of Batman. Yeah. So I feel good. This is the 188th episode, which I guess I just realized it means we completed 6 months. 6 months of daily, 7 days a week, 8 a.m., 8 to 8:30 now, with winters and all. 6 months of daily. There were 3 days out when I was traveling, 4 more days for traveling. Apart from those traveling days, there was just one day where we had to pause. Other than that, every day was cool. So we did 6 months regularly, non-stop, without fail, right? The show that we deserve. How was that? Does that make you feel good, folks? Uh, Good morning and good morning, says Mr. Peeyush Sethi and Mr. William Davis. Good morning to you. Does it feel for good, folks? 6 months uninterrupted. Uh, it's done. So thinkers frequency. You know what I've realized is lately. Uh, it's a very recent realization. YouTube ads are a pretty good indicator, or could be a good indicator of what where your life is going, right? So don't take it seriously beyond a point. But uh, I used to get ads about Muslim dating apps, and I'm not into dating. And I'm not into Muslim dating specifically. So that was an oddly specific ad, which I used to get some sort of weird, anonymous kind of a Muslim dating app. And now I'm getting ads of Range Rover. Right? So these days, the ads I get are of Range Rover, all these stock trading guys who are trying to sell stock trading operation, the YouTube ads, and all of these people, right? This is a big step up from Muslim dating app, right? What do you think? Do you notice what kind of ads you get and what they could be telling about yourself? I mean, it's so interesting, right? How we think about the concept of privacy in this day and age, and the best predictor of what's going on in your life, directly or indirectly, a vague mention of somewhere. I mean, I might have talked to a Muslim friend of mine who's probably going through a separation or something of that sort, and then Muslim dating app. And have you ever thought of ads as a proxy of where your life is going on? It's a way to think, right? It's definitely a way to think. And if you're getting ads of Range Rover, I guess it's a respite. It's a respite, man. So, with that, uh, let us begin. India surprised everybody, folks. 8.2, right? 8.2% quarterly GDP growth, 6 month high. It's awesome, whatever is happening when it comes to Indian GDP growth. Now, do you remember what we told you when it came to the Indian GDP numbers? Uh, do you remember what we told you? What they were going for was an 8% growth rate. That's why the personal tax rationalization happened. That's why the GST rationalization happened. That's why everything. That's why the whole capex revival is happening. Everything is to project India as a potent destination for investment money, because India essentially has a window of these next 4 or 5 years till the time there's a very big global reset. The global reset is what Ray Dalio calls as the passing of the baton of the world economy from US to invariably China. When China essentially becomes the de facto hegemon of the world, it's going to be an increasingly and extremely challenging situation for the country, right, for India, because that is uh, an adversarial neighbor, right, adversarial. So it's gonna be hard. So till that time, if India comes, you know, moves beyond its escape velocity, it's gonna be good, very good. So these particular years are extremely crucial. So CEA says, Center of Economic Advisory, of course, says that we are targeting a GDP growth rate of 7% in FY26. So if we can hit 7%, that could be amazing. So years ago, 3 years ago, Bain had written a report where they had said that the per capita income, so they had published this report back in 2022, 22, 20, yeah, 22, I guess, right? And they had said that India's GDP per capita would be at about $5,500 by 2027, in the next 7 years or 8 years, maybe 2030, right? So there were 7, 8 years, and India's per capita income would be at $5,500. And I checked out India's per capita income at that time, it was about $2,000. And I was like, from $2,200 maybe you're talking about uh, $5.5 thousand in 7 to 8 years. That means you're looking at a CAGR of 11%, right? 11%. And I was like, this is bullshit. This is bullshit, folks. That's what I said, right? Because I realized that an optimistic estimate when it comes to CAGR of per capita income of the country would be at about 7 to 8%. But if you're very optimistic, you can go 8%, but 7%. So let's say even if economic flywheels are all, firing on all cylinders, right? And there's something good that happens, some bad years and so on and so forth. You get an offset of 7.7.5, 7.8%. So 8%, if you grow at 8% from 2022 to 2030, you'd essentially reach about $4,500. And that was just a paper napkin math which I did, and I found out that those people were absolutely out of their ass when it came to projecting India's GDP per capita in 2030. That's a simple thing, right? And they screwed it up so badly. It was a Google-funded, Google collaboration Bain report, which was talking about India's GDP per capita, and they were looking at an 11.5%. And the reality is proving on as we are moving forward. So it was 2022, 2023, 23, 24, 25, 26 is where we are standing. 7% is the rate. So Bain was wrong, I was right. And all it took was a long drive on which I was just getting bored. And at this report, I started doing math. And that's how wrong these people are. So this is a lesson on authority bias. Whenever you're reading these reports from these folks or anybody, right? Take them with a pinch of salt. They don't know what the fuck they're... Oh, I'm sorry. They don't know what they're doing. Sorry about that, folks. Mr. Vedant Singh asked, why do you do this? The objective practice? Okay. He's clearly new to Thinker's Frequency. Well, we do this because the routine is the reward. Routine is great. This is a great practice. It is essentially a very good way to keep yourself updated. And the core reason we do this is to be able to predict the future. We try to predict the future in little and big ways, wherever things go, how things go, and so on and so forth. We try to predict the future. And because we believe, as Mr. Elon Musk said, or, Scott Adams sir said, predicting the future or ability to predict the future is the best measure of intelligence. So we are essentially sharpening our tools that way. We read, we analyze, we read behind the numbers, we read between the lines, and then we try to make predictions and see where they go. And for whatever we've been at, for 6 months, our predictions have been extremely tight, right? So let's move on. 8.2%, folks, doing well. Indian economy, right? 9.1% rebound in manufacturing. So if you look at the survey, the second quarter growth was pegged at 7.3%, better than expected, right? It was led by 9.2% expansion in services and 9.1% in manufacturing. So 9.1, 9.2, right? Private consumption, 60% of GDP. Private consumption in India is 60% of GDP. Rose at 7.9%, right? Compared with 7% in the earlier quarter. Gross fixed capital, a measure of investment, GFE, it grew 7.3%, which is also amazing, right? Agriculture growth was at 3.5%, slightly lower than 3.7% in the last quarter. So all of these things are pretty cool, right? Speaking of cool and speaking of predictions, right? Do you remember, folks, what we told you about the the defense budget? Do you remember? Viewers of Thinkers Frequency would remember, right? What were we talking about when it came to the defense spend of the country? Do you remember what I told you? That there's something going to be happening in budget, right? which is gonna decide how much India spends on defense. What did I tell you? What did I tell you? Do you remember that? Come on, come on. Gotta remember that. Of course, right? What is that? What did I tell you? Uh, Come on, folks. You know it. You know it. Huh? It should increase by a whole percentage at least, says Mr. Peeyush Sethi. Not by a whole percentage. Currently, India spends about 1.9 percent of GDP on defense. It can certainly not spend 2.9%. That'll be too much. That'll be huge. So India's current defense budget is at about $78 billion. What we were hoping for was that this would rise to by from 1.9% it will go to 2.2% or 2.5%, which will be amazing, which will be the global standard. And now Defense Ministry says that they are seeking a 20% budget hike. So from $7.5 billion, $75 billion, if you raise it up by 20%, which is 78 billion, take it $80 billion, you're making it rise by 20%. That means you're increasing it by $16 billion, right? How much is that in percentage terms from GDP? India has a $4 trillion economy. 40 billion will be 1%. 0.5% will be $20 billion. 16 billion would be about 0.3 to 0.4%. Is that correct? Is that correct? Yes, it is. And that is exactly what they're looking at. From 1.9 to 2.3 to 2.4. Not 2.5, but 2.3 to 2.4. What did I tell you, folks? What did I tell you? What did I tell you? Mr. Abhishek Sharma says $100 billion. No, it's not $100 billion. I hope you got it. But what did I tell you? Now you might be surprised, like, hey, how did you guess exactly the amount of percentage that they'll be arriving at, right? From 1.9 to 2.5%. How did you make that guess? And how could that be right to that percentage degree? That they could be like, you said 1.9 to 2.5, and that's exactly what they're looking at in the defense budget. How did you come at that, right? So there are a few variables. There are a few incentives. If you can guess the incentives, if you can read the variables, read the incentives, you can predict exactly what's going to happen to the right decimal point, right? So the variable here is that the global average when it comes to the developed world, or not the developed world, the global average is about 2.5%. And India has a particularly complicated situation when it comes to China and when it comes to Pakistan, and both are like serious adversaries. China, at the to a greater degree, is an expansionist power. So and then there's the third adversary, which is just turned bad. It's Bangladesh, because of Madam Sheikh Hasina and whatever is happening there, right? The ouster of Madam Sheikh Hasina. So India could not have sustained 1.9% at all, right? It had to supersede the global average, right? While it would be nice for India to have like a 3% defense spend, right? There is a limit to which you can push the envelope when it comes to defense spend, because money is not, it's not, you can't throw money at a problem. Just raising the budget of a particular industry or of a particular ministry doesn't make it a good investment, because that money needs to be absorbed. It's not always a supply constraint problem. It's also a demand constraint problem. If you throw that kind of money, would people be able to mobilize themselves, or would it just be eaten up, right? So that is a concern. So you have to go about a step-by-step way, in a step-by-step way. And the best India could have done would have been like a 20 to 30% rise CAGR, which is exactly what they're looking at. They're saying 20% now and then 20% for the rest of the decade or so, right? So Exact prediction, nailed it, absolutely nailed it. And this is what we do here. This is why we do this, right? To be able to predict. So, cheers to that, folks. Cheers to that. Did you like it? Do you remember, by the way, this discussion? I hope you do. I hope you do. Regular viewers of Thinkers Frequency would definitely remember. We were very, very bullish on defense. We told you that this was going to be an index worth watching for, and this defense as an industry is the, if shipbuilding is said to be the mother of heavy engineering, defense is the father of heavy engineering. Defense is the uh, patriarch of that entire family when it comes to engineering prowess, because defense has to be, is by design, a vertically integrated practice. So you cannot be importing a lot of material, especially in a sensitive industry like defense, right? So you can't be, even though we still do, which is bad, but you cannot do that sustainably. So defense essentially uh, creates capabilities, because you go down the chain and till the end equipment, you try to build yourself up from there. So it's just an amazing way to incubate new technology and new technological prowess. So that's what's happening, and that's exactly what we told you. So cheers to that, folks. Anyway, moving on. Tata Electronics charges to hire more. Company to raise headcount at Hosur plant to 75,000 from 66,000 right now. So 75,000. Why is this happening? Of course, it's basically Apple. Apple exports are hitting $20 billion from the country. $20 billion is a lot of money. 20 billion, as I said, probably in a last few episodes, I mentioned that Apple is the tent pole, which is essentially creating an entire ECMS, electronic component manufacturing system, in the country, right? It's basically creating an entire ecosystem in the country of electronics manufacturing, even though it's right now very, assembly kind of an operation, but soon a lot of core components will be manufactured as well. So this would make Tata Electronics headcount equal to Foxconn's headcount. Foxconn also has about 75,000 people in India, right? So exports of Apple have hit $10 billion in the first 6 months. They're gonna go up 75%. So it's like a 75% growth story, right? CAGR. It's gonna be $20 billion this year. So that's gonna be huge, which is amazing for the country, right? Now, what we need next is, of course, some component manufacturers. I wish Tata Electronics to be a public company, says Mr. Sumanth Kumar. Absolutely. We need new companies, electronics core component manufacturing companies, right, to go public. And if they don't go public, what we should be doing is investing in these startups, which have the capability to essentially do that. So I'm talking about core components. They don't have to be necessarily brands, because brands are not or cannot be in the business of manufacturing core components, right? But if you have a core component play, let's say Tata invested in the silicon ingot and wafer manufacturing play, right? Which is going to be the core component for the solar play, right? Those kind of startups, they would be doing very well. So the downside of those startups is that essentially they are in the commodity play, right? Their earnings won't be very, very bright because the margins will always be thin. They'll be competing with China and Vietnam and their rerouted shipments and so on and so forth. But they'd be doing a great service to the country. And one second, folks. And they'd be making for a very, very good business case if the country supports them. If the government supports them. So those businesses will have predictable growth, predictable. So even if brands rise and fall, right? If you remember, Micromax used to be a big brand. It's not anymore. Boat used to be a big brand. We are not sure of where it'll go, and so on and so forth. These component manufacturing players just go with the industry, so they just keep rising. So we need more public companies, and we also need more startups when it comes to that. So I hope to be able to get myself involved in some of this play, right, through money. That is a good wish. Moving on, folks. Black Friday and Cyber Monday, good zoom of sales 20 to 25% off. Brands, retailers see upbeat consumer sentiment, festive period GST reduction, and so on. So that is pretty amazing, whatever is happening, right? Speaking of sales, folks, Amazon has chosen to let go of its referral fee for products below 1,000 rupees. Referral fee is, of course, the commission which Amazon charges to sellers, right? No referral fee. Halts referral fee for items below 1,000 till December 31st. This is once again a move to spearhead more consumption, spearhead more sales. This is awesome. This is going to be helping. So a lot of these moves, if you look at the e-commerce play, or they are riding on a consumer sentiment which has just turned around in a matter of 6 months. So if you pick up a paper from 6 months ago, right, you're gonna see all the FMCG companies crying, all everybody crying that, oh, the economy is slow, we're not being able to move the product. And now, they're trying to find out ways to essentially carry the truck, right? Which is beautiful. Speaking of carrying the truck, folks, speaking of e-commerce and so on and so forth, Meesho is going public, of course, and Meesho's public issue is gonna be huge, right? So 103 to 111 per share, upcoming IPO, valuing the company at $5.7 billion. $5.7 billion. The founders are gonna be, worth 5,200 crores and 3,500 crores. So they still own like 18.5% of the company, which is huge. Which is huge. They are diluting about 0.3%, 178 crore each. $5.7 billion. That's amazing for the kind of operation Meesho is. Meesho began as a social seller, right? Something like a WhatsApp, an Instagram bio, WhatsApp reselling operation. That was kind of a, if you can look at it, social commerce, Shopify kind of a thing, right? Where you have a store which essentially enables some sort of back-end operations. Then it went into the Pinduoduo model, the essentially zero commission CFO play, right? Where you make money from ads and fulfillment and so on and so forth. So that is Meesho's story. Meesho's story is doing pretty well. Yeah, horizontal e-commerce platforms have been making losses. Meesho has also come back to making losses, but it says that we are cash flow positive, free cash flow positive. So if they're being able to add cash, and they're definitely healthier than Amazon and Flipkart, there's no doubt about that. It's just about how much and for how long will they be able to sustain the operations, because a lot of people have mentioned that Meesho's brand equity when it comes to the seller side is very low. There are a lot of frauds that happen on Meesho. There's a lot of returns. The returns are huge, and so there are a lot of systemic issues with the business model. But it's been green. It's the only horizontal e-commerce company which can claim to be even claim to be close to profitability, which is just great news, right? Which is extraordinary. So cheers to Meesho, I guess. What's the revenue stage of Meesho right now? 1 second, folks. Meesho FY25 revenue. Okay. So Meesho clocked 9,300 crores of operating revenue. Net loss was at 4,000 crores, But that was just one time exceptional item, right? Reverse tax flip and so on and so forth, because they had to become an Indian company and whatnot. But 9,300 crores, and they are getting valued at 51,000 crores. That's a revenue multiple of 5, which is not that bad. Which is not that bad, right? I'm sorry for my voice, folks. Moving on. They say zero commission model will be pushing the value retail. Value retail is the lower average order value, the 200, 250 rupee average order value. So let's see what happens with Meesho, right? For now, it looks good. There's an interview of Mr. Jimmy Wales. He's talking about Wikipedia. Jimmy Wales is the founder of Wikipedia, if you don't know. So Mr. Jimmy Wales started Wikipedia with Mr. Larry Singer. Those two people started Wikipedia. But as Wikipedia became something, became huge, Mr. Jimmy Wales tried to erase Mr. Larry Singer's name from Wikipedia, right? Essentially, literally from the history of Wikipedia on Wikipedia. But he couldn't do that because of the nature of Wiki, right? So Larry Singer stayed on record. Mr. Jimmy Wales, Wikipedia has been a useful tool, and he's talking about donations. He says that we still need donations because with AI scraping, people see Wikipedia and a drop in traffic doesn't mean a drop in uh, donation. So what he means is that AI scraping happens, and when AI scraping happens, people don't go to the source article, that is Wikipedia, but they look at the attribution of Wikipedia on the LLM, right? So if they look at the attribution on Wikipedia of Wikipedia, they still have the brand recall, and that could lead to donations. So donations have not fallen as much as the traffic has fallen. So he says that traffic has fallen, by about 8%, but donations have not fallen at about 8%. So that's what he says. But what he fails to mention is that traffic and donation are not as correlated as people might believe. It's not that regular viewers of Wikipedia are actually donating to Wikipedia. The patronage of Wikipedia comes through and from a specific network of NGOs, which may or may not have anything to do with viewers, right? So Wikipedia was recently in a lot of controversy for being biased, politically affected, and so on and so forth. Now, how Mr. Jimmy Wales addresses that concern is that he says, I can't be writing the first draft of that history when it comes to India and other places, right? If there is a media organization which has made that first draft of history, and if it's attributable, if that source is attributable, Wikipedia could pick it up, right? But unfortunately, there is not. And because there is not, we pick up whatever there is as far as the popular, uh, you know, uh, so let's say historical context is, and because we pick that, it seems biased, but we are not biased. But that was disproven because they actually actively, the editorial play of Wikipedia, they were actively removing attributions to a particular political ideology. Media outlets affiliated to a particular ideology, and Wikipedia doesn't disclose its volunteers. So everybody seems like it's a black box, right? There was a news which came out that all the Wikipedia essentially got traced back to one person, right? So you could ask him instead of going through the source. So those things are deeply worrying. I used to be a very regular donor of to Wikipedia, very small donations as somebody who's benefited from the organization, but I don't do that anymore. I found the bias very, very appalling, right? So I had to stop. What about you folks? Have you ever donated to Wikipedia? And if you donated to Wikipedia before, What is your stance on Wikipedia donations now? Do you still donate to Wikipedia? Did that controversy change how you view Wikipedia and how you interact with Wikipedia as an organization? That is a very good question I'd like to ask you. Moving on, folks. Any answers to that? Anybody, folks? Has Wikipedia controversy affected how you view the organization, how you interact with the product? This is something I genuinely want to know. Anybody? All right, I guess I'll have to move on. I guess nobody gives a shit about Wikipedia. Anyway, the new labor codes, India Inc. to feel the weight of bulkier pay slips, right? Rise in cost of bonus, gratuity, overtime benefits to increase firms' salary outgo. I never did any contribution. That's okay. I did. I used to feel very thankful for Wikipedia. I thought, during my college days and even school days, and the way I interacted with Wikipedia was like I read copious amount of Wikipedia pages. So I used to read, a big fact about Wikipedia is used to be, at least I don't know now, but it used to be that if you open any page about anything, okay, and you open the first link of that page, not the first link as in the etymology of it and so on and so forth, right? The phonetic, or not that. The first link about the description of it, right? So if you open about Apple, the company, or let's say Tata Electronics, and you see it is a company and the first hyperlink, okay, and you keep doing that, if you keep going for the first hyperlink, right, you arrive at philosophy as the final page, which was so beautiful, which was so fascinating, right? Because philosophy is essentially the root of all thinking, right? That's how you see. Philosophy in Hindi is Darshan Shastra. Darshan Shastra is the principles of looking, right? So that used to be. So I used to love Wikipedia, but yeah, that controversy definitely affected my way of seeing it, right? Politics, whenever it gets involved, it changes things. Moving on, folks. Speaking of defense deals, India has signed an 8,000 crore deal with US on choppers, MH60R choppers. You know why India is doing this, right? Why is India signing all these defense deals with US, folks? You know why. We've talked about this. Let's move on. Working on FDI reforms in nuclear, defense, insurance, agri sector. We've talked a lot about that. Did you know? Trade deal, says Mr. Sumanth Kumar. Correct. Did you know that Adani Group is planning to raise 90,000 crores via debt by in 2027? So about, just imagine the scale, about 20,000 a quarter, right? That's borrowing a part of group's 1.57 lakh crore of capex for FY27. So private capex, always a good news, right? For the current fiscal year, the group has already mobilized nearly 80,000 crore and expects to raise an additional 44,000 crore over the remaining 4 months. So that's what's happening with Adani Group. It's just whatever it's doing is at a scale which is almost unmatched and unmatchable, right? Nobody is looking at capex like this. And all of this capex is essentially going in very necessary infrastructure projects, right? ports and basically very, very necessary stuff. So this is great news. This is absolutely good news. With aggressive expansion underway in airports, energy transitions, ports, data centers, and new industrial infrastructure, the group's financial plan is expected to support growth while spreading its fundraising across domestic and global markets. So debt and equity both in the fray, and that's what's Adani Group looking at right now. Moving on, folks. Gold outshone diamond this wedding season. Diamond for lightweight, pure gold jewelry surges because of high resale value. Couples prefer diamond studded pieces for small ceremonies. So, diamond has, of course, lost its sheen. Anybody who knows about diamond business knows why diamonds have essentially, they are going to die. Diamonds are dying. Why do you think diamonds are dying? Why do you think diamonds are in trouble? We've talked about this. You know about this. Lab grown, says Mr. Sumanth Kumar. Correct. Lab grown diamonds have taken away the sheen from the entire diamond industry. The diamond exports to US and China have declined and are declining. They've been booted out from the market on price from lab grown diamonds, which is just extraordinary whatever is happening. Soon enough, diamonds might just become a commodity and could be very, very weird. Gold, on the other hand, is a safe play, right? Gold is a store of value. So that's what's happening with the jewelry market. By the way, decline in diamond will be very bad for Indian economy. Do you know how? The Gujarat economy essentially depends on a lot of diamond merchants. So if diamonds go out of business, right, and this diamond polishing play, India is the world's largest diamond polishing center. So whatever diamonds are found or let's say discovered or mined in Africa, all of it comes to India for polishing. So India is like 90% of diamond polishing, right? If that goes away, a lot of people go out of work and they wouldn't be able to get absorbed in anything else because, diamond trade has been going on for generations. So their skill set is very, very specific. So that is not a good news. Moving on, folks. French company Bain increases stake across its key Indian units. French company, they are entertainment players. I thought, when it comes to art and entertainment, Cannes Film Festival, and so on and so forth, French company, I thought they're increasing across Indian units. Maybe we're going to see some quality French cinema in India. Then I found out that this is the company behind Big Boss. Big Boss. These people make the cringe of all cringe. Big Boss, right? So broader consolidation strategy extends a multi-year effort by company to bring its India entities under closer group level control. So that's what's happening. Moving on, folks. India's listed REIT scale up as vacancy falls, backers grow. So real estate, of course, it's growing in India. REITs, real estate investment trusts, they're growing as well. A lot of money flowing into real estate. We talked about that yesterday, I guess. We talk about it quite often. Real estate has done a very, very well in India. If you look at combined potential expansion value, it's at 10 lakh crores. 10 lakh crores is roughly $7 to $8 billion, right? And high quality office assets are at 6 lakh crores, 5.9 lakh crores. Retail real estate, 2.8 lakh crores. And housing, upcoming 70 million square feet institutional grade supply, 2.1 lakh crore. So a lot of money going into real estate, tier 2, tier 3 as well, and the, metropolitans as well. What's driving this real estate madness is one particular aspect. Can you guess what it is? We've talked about this. What's that one tent pole upon which this real estate revolution is brewing? Can you guess, folks? We've talked about this. You should know. What is it? GCC, says Mr. Sumanth Kumar. Correct. Mr. Sumanth Kumar on fire. 6 to 7% yield. Retail investor count growing to 2.5 million. RE assets geographically growing. Moving on, folks. Mutual fund and SIF investments in REITs to be treated as equity from Jan. We've talked about that. That is a development story. Moving on. New highs not enough to shed caution. Dalal Street catches its breath. It's going up. Any thoughts on which listed company has green prospect in real estate play? Well, Sobha Developers is a very ethically inclined developer, right? Every developer essentially has been a pretty shitty business, right? Developers have been very ethically compromised. Real estate has been a Khosla ka Ghosla affair for a very, very long time, right? Except for these guys. So these guys, and of course there's DLF. There are some few marquee players. Let me check what Shobha stock has been doing. Oh, it's done well. Yeah, I'm right. 400% in the last 5 years. 400% is great, right? For the last 5 years, it's awesome. In the last 1 year, it has not grown at all. 8% declined. And maximum is okay. 5 years, it's 400%. So Soba has done well. What are some other companies? Now you'll be able to invest in the REITs directly as an equity play, right? So that is obviously a thing to guess. So let me check what DLF is. DLF a listed play? It is, of course. In 5 years, DLF has grown 287%. Not that green. Not that green. In the last year, it's declined 11%. So real estate stocks had really heated up, right, in a few years prior. In the last year, they cooled down. Oberoi Brigade. Let me check that as well. Oberoi Brigade. I have no clue about it. Oberoi Realty. You mean, one second. Acha, Oberoi or Brigade. Brigade Enterprises is another company. I'll check that as well. Oberoi Realty, 5 years, 255%. So all of these companies have been very correlated. If you can guess, Soba has outperformed all of those guys. Brigade, let me check Brigade. Brigade Enterprises seems to be a less traded stock. But in the last 5 years, it's at 680%. 300%. So, this is the standard play. Soba has been an outperformer. But real estate is not something that can be a multi-bagger in a very short period. It's not a sure bet because there's a lot of, fugazi, which keeps happening. And a lot of people get bullish on a new real estate developer like M3M. And then these people have to go to jail and so on and so forth. So it's always a tricky bet. That's why I try to avoid it. But anyway, not a stock recommendation. I don't want SEBI on my butt. Moving on, folks. Banks on year credit growth at the end of November 14th moderated to 11.4, while deposits grew at 10.2%. Credit growth was seen at 11.5% a fortnight back, while deposits grew 9.5%. Gold loan and everything is going up. Gold loan, by the way, are leading to more and more action when it comes to gold loan providers. So gold loan rush is just happening, right? What is gold doing, by the way, folks? Let me check the GLD price as well. I haven't checked it for a very long time. 1.2% up. In 5 days, 3.69. In a month, 7%. In 6 months, 27%. Holy shit. Gold is returning money like anything. Moving on, folks. RBI allows banks to pitch products after client login. That's okay. That's a minor thing. IVRCL liquidation hits wall as bidder fails to pay 1.2 thousand crores. So IVRCL had a whole liquidation process. It went through the whole drill, right? The successful bidder then failed to pay the amount. The bidder P. Prasad Reddy failed to pay agreed 1.2 thousand crores within the deadline. Reddy paid 150 crores, including earnest money, but did complete the deal. So new recovery strategy. It's gonna have the whole place 6-year-old liquidation process of Hyderabad-based engineering, procurement, and construction company EPC, like L&T, has hit a wall. This is very weird. This keeps happening. That's why stressed assets are very hard to deal with. That's why stressed assets make money, because it's very difficult. It's a difficult operation, right? Moving on, folks. Aiming to conclude the first track of US trade deal by December, says Commerce Secretary. First track of US trade talks, not the deal, trade talks. Nobody knows how much time it's going to take for India to actually conclude the deal in its entirety, but things are moving fast, right? Mr. Peeyush Goyal says that India is in talks with 50 nations for trade pacts, so it's no joke. We're trying to go fast, right? At the same time, the government's the fiscal health is pretty good. Fiscal deficit at 52% of annual target till October, right? Expenditure savings, higher tax, non-revenue to keep the deficit on target. So they have a fiscal deficit target which is at about 4.4% or something of that sort. That's going to stay intact. So all the expenditures that are happening pretty much in line with the target, right? Moving on. OYO, by the way, is going to go public. 6,500 crore IPO. 6,500 crore IPO, right? Huge, huge. It seems OYO is gonna sail through, man. If this IPO hadn't happened, or if something would have gone wrong with this IPO, the entire company would have collapsed, right? Because all of their term loans, all of their company loans, the founder loans, all of them are hitting paywall. And if this IPO wouldn't have happened, the covenant to loans, the breach of covenant would have happened, which would have made SoftBank take shares from OYO, from Ritesh Agrawal, exit Ritesh Agrawal, hold its stock, and then move forward. So there would have been a management change. The company would have had to sell its holdings, right? It would have had to basically pare down its debt by selling assets, these European units, these American units, which it is bought on leverage buyout, right? So all of that Ponzi would have come down, and the company would have just failed in a very, very big way. All of it essentially was dependent on this particular IPO, which is finally going through. So the company will survive, and now the company is a standard hotel company, so it'll survive. So OYO is truly the luckiest company in the history of all companies, man. That company shouldn't have existed. It shouldn't have existed. That's the bottom line. That company didn't have the right to exist. It was a very bad idea from the start, right? Organizing mom and pop hotel rooms. It's just a very, very stupid, absolutely moronic idea when it comes to implementation perspective. It's just retarded, absolutely retarded. On that idea, they raised billions of dollars, they burnt billions of dollars, then flipped the idea, changed it, abandoned it. Now it's no longer an organizer of retail mom and pop hotel chains. No, now it's a regular hotel company, right? Lemon Tree or something of that sort, or Fab Hotels. Like Fab Hotels was from the start a company with a vision. OYO was just a shitstorm, right? It was just spray and pray, and they have been able to go ahead, man. Now the company will be safe. if the IPO stays safe. It's amazing. It's just, you've got to be lucky. You've got to be incredibly lucky. Oyo is like the luckiest company ever. They were ethically non-compliant, right? They bought this company Zorooms, and then they didn't pay them. They didn't pay their hotel partners. They looted everybody. They basically looted everybody, and they still survived. Amazing. Whatever's happening is amazing. I mean, these people, these Oyo guys, if you read that story in Mint about 2015, this guy Ritesh Agrawal even jacked his own co-founders, right? So he screwed those guys as well, and it's just extraordinary how that company has survived and will survive now. If this IPO goes through, and it will go through, of course, that's it, right? Oyo is saved. So sometimes you can do everything wrong. You can do everything wrong, right? You can start with a shitty idea, absolute bullshit, but you will get a lot of money. You will get a lot of money. You will burn all that money, but then you'll get more money, right? You know how Oyo got the big bucks, right? SoftBank raised Vision Fund, $100 billion. It didn't know what to do. It really didn't know what to do. So it came to India. Masa met Ritesh Agrawal, and he said he's gonna get $500 million without veto rights. We don't want that. $500 million in fresh capital at the valuation, of his choosing. So ultimate favorable returns. And he said, his people said, sir, but what are you gonna do? And should we run it to the committee, the investment committee? No committee for him. He reminds me of my younger days, right? That's how he got that capital. And then he burnt all that capital, ruined it, right? It was a monster, bonfire of dollars, right? Then came COVID, just ruined all the contracts, called force majeure, killed all the mom and pop hotel chains, right? Changed the business model, became a regular hotel chain, and, bought USA hotel chains. Now most of Oyo's money is coming from, the Motel 6 chain. By the way, I got approached by a whole fraternity of Motel 6 operators, some 100 people, and they wanted me to write an article about how Oyo is shortchanging them as well. So it's also screwing with Motel 6 brand equity while building it. So, but that's that. The beauty is, right, the insight is that you can do everything wrong, right? But you can still make it. You can still make it. And with that, we come to the end of the 188th episode, 80th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. It's 9:23. We're going to punch in anytime soon. I hope you liked the episode. I hope you enjoyed it. I hope it added value to you. It definitely was a lot of fun for me, a lot of value for me. Please take care. And I should thank Mr. William Davis, Mr. Peeyush Sethi, Mr. Sumanth Kumar, Mr. Vedant Singh, Mr. Abhishek Sharma, and everybody else who joined. Please take care. Bye-bye. PR machine is huge. I don't understand why Mr. Aditya Ghosh joined them. Oh, so Mr. Aditya Ghosh joined them and then just left. So he talked big things about Oyo and then just left, right? Quietly went away. So you can do everything wrong, but still make it. That's the insight, folks. Take care. Bye-bye.